Market closed Thursday in the mixed territory as the investors juggled weaknesses in the United States technology shares, broad losses across Latin America, and the cautious trading in the Europe and the Asia. The volatility indicators also ticked higher, reflecting the unease over the monetary policy, the economic growth, and the ongoing geopolitical tensions. The United States market tech sell-off the leads declines. Also, on the Wall Street, the Dow Jones Industrial Average inched up 0.02% to close at 44,922.27, supported by the defensive blue chip stocks. But the overall tone was negative. The S&P 500 slipped 0.59% to close at 6,411, dragged down by the declines in the technology, consumer, discretionary, and cyclical sectors. The Nasdaq Composite, heavily weighed towards the mega-cap tech stocks, fell 1.46% to 21,314.95 as the profit-taking hit high-growth names amid the concerns that stretched valuation that could falter in a higher-for-longer interest rate environment. The small cap also struggled. The Russell 2000 dropped 0.78% to reach 2,276.61, reflecting the pressure on the domestically focused firms more vulnerable to credit and spending conditions. Signs of the investor cautious were also visible in the CBOE volatility index, the VIX, which also rose nearly 4% to 15.57, highlighting the growing demand for the downside protection ahead of the upcoming inflation data and fresh commentary from the Federal Reserve officials. The analysts have also noted that while corporate earnings have held up sticky inflation and a robust labor supply and market that could also push the Federation to the delaying of the rate cuts, the Federation limiting the further equity gains after a strong first half of the 2025. Canada commodities drag on the stocks. The north of the border, the Canadian markets mirrored the United States' weakness. The S&P TSX Composite Index fell 0.35% to reach 27,823.88, while the S&P TSX 60 slipped 0.15% to 1652.51. The losses were concentrated in the energy and the mining stock, pressured by the softer crude oil and copper prices. The strategist emphasized that Canada's resource-heavy market remains sensitive to the global commodity demand, particularly from the China. Ongoing troubles in the China's property sector have also weighed on the industrial activity, dragging the prices for the base metals. The commodity oil held near rarely low. The commodities market were subdued. The WTI crude oil settled flat at $61.77 per barrel, near the bottom of its 52-week range of $55.12 to $79.39. Similarly, the Brent crude oil was unchanged at $64.91, also trending closer to the lower end of its range. Oil remains caught between the weak demand signals, especially from the China, and the steady supply from the OPEC Plus producers. At the same time, the geopolitical risk in the Middle East and the shipping disruptions have also provided some price support, preventing a deeper slide. Traders are also awaiting inventory data and demand outlook from the International Energy Agency and the OPEC for the clear directions. The natural gas also traded flat at $2.77 per MMBTU, with the prices stuck at $2.02 to $4 range over the past year. The United States inventories remain comfortable after a mild winter, but the demand in the second half of the year will depend on the summer weather pattern and the LNG export flows to the Europe and Asia, where the natural gas remains key to the replacing of the Russian supplies. The precious metal, the stability at the high levels, the safe haven demand kept the precious metal steady. The gold closed unchanged at $3,358 per ounce, hovering near record highs within its 52-week band of $2,500 to $3,500. The analyst said the metal continues to benefit from the hedging against the economic and the geopolitical uncertainty. Silver be also traded flat at the $37, maintaining the stability